Okay, very warm welcome, all members on YouTube. Always grateful for your love and support. And thank you all for believing in me and being on the channel for a couple of months now and renewing your memberships. Means a lot to me. Today, I'll focus on something I called the inside bars. And I think if you ask me that what is the most effective way of trading breakouts, or what is that one way that Devang, you want to recommend all of us to make consistent money by following one system. So I would suggest you trade the inside candle breakouts or inside bar breakouts. So this video is going to be all about that. And as I always say, I'm assuming some people are new to the world of technical analysis. Some people are already, already people who are in this field for quite some time. So taking that into consideration, I'm going to take things very slowly, assuming you have no idea what I'm talking about. And then I will rush you all into things. And we'll do a detailed study of 30 to 40 minutes today about inside candle breakouts. I'm assuming that you have watched my previous videos, all of them. So last video was the two-part video in which I discussed about how do you understand the fundamental idea of trading sectors, the top-down approach. So I hope that you watched that and that you liked that video. So make sure that you see all these videos in series that I am creating them so that you get maximum output from them. First thing that you need to understand, I think one doubt that people had on the ATR video, so I just want to show that to you right away, is on Bitcoin. One of the members, Saurabh Karat, if I'm not wrong with your name, let me know in the comments. He asked me this question that on the 1 hour chart, Bitcoin gave a breakout, the Bitcoin BTC USD gave a breakout. So why did the breakout not pass? Is it because the ATR values were not broken? If you observe this chart of Bitcoin US dollar, he put up a comment. So I'm just saying that out to you and clarifying that out. You can see the market was consolidating in this point of time and eventually got a good 1 hour closing above this resistance of the highs of the candle. But still the market reversed. And yes, Saurabh, you are right. You are looking at ATR the right way. Because if I open ATR for you right now, you can see I am trying to also create a very detailed video on this concept, but just for the sake of simplicity, I'll just show you what was the ATR at that point. Average true range. Okay, okay, it's already there on my screen. Very sorry. If you look at the ATR indicator, first of all, a lot of people have these doubts. Do they work on all segments? Yes, they will. They'll work on all segments. They'll work on all time frames. So if you're trading a 1 hour breakout, you're concerned with the 1 hour ATR. At this point of time, when that candle was breaking out, if you're observing, the ATR at that candle was 402 rupees. I hope you can see that on the bottom left of the screen. Now you can, how do you know it's 402? You can see on the bottom left. This means that on an average, in this point of time, the market for Bitcoin moves in one single hour 400 points on the dollar. That is why, if you observe, this means that a 400-point buffer is available on the screen. So everyone who's a new member, go to my ATR video and see that video. What we have to do is just mark from the resistance zone. What is our formula for ATR? The normal stop loss plus ATR buffer. That is the final stop loss. And if the market goes above that, then the move is right. But if the market doesn't go above that, then the move is shady. So for example, what I mean by that is you can see at this point of time, these were the highs. Put your 400 points from here and you can clearly see that the market has never ever gone above the ATR values, which means that the professionals have used this buffer to go short. Only and only if the market goes above this region, only then the breakout will work. That is why even on Telegram, I put up a message that the Bitcoin is consolidating, but let it go over 51,900 and then only the movement will happen. So I hope your doubt on Bitcoin, on the ATR concept, it is clear. Now, coming back to the topic of concern, which is nothing but the ATR, which is nothing but the inside candles, let me just explain some very basic terminologies. There are two ways in which you can make money in this market. The first way is if you're trading between a range, you buy on the support, you sell at the resistance. That is one way that you can make money, or you sell at a resistance or you buy at a support. So you sell here and you exit here. I'm very sorry. So there are two ways. You have to understand there are two types of market. There is one market which is either a trending market. So trending means an uptrend or a downtrend. I'll talk about these a little bit later in one of the individual videos. This is one kind of market. The other kind of market is a market that moves in a range, sideways market. all of these markets have different methodologies that you have to use while you're trading. So if you're in a sideways market, we're not expecting a breakout. And you also should be aware that 90% of the times or 80% of the times, the breakouts will fail. That's because obviously I've taught you the ATR concept now, and you'll be able to identify much stronger when the breakout passes or when the breakout doesn't pass. So 80 to 90% of the times the breakouts fail. So the question is, how do I make money on breakouts? So I've identified this approach called the inside bar trading, which will help you give you more accuracy of timing the breakout, and which will give you more precision of when to enter and when not to enter while trading a breakout. That is, so inside candle concept is a concept I am using not in a sideways market, but I'll be using it when the breakouts happen and when that breakouts lead to a trending market. So that is one basic idea that I want to introduce. So I am using inside candles not in a sideways range from moving from support to resistance or resistance to support, but I'll be using when the markets either break resistance or they break supports. That's point number one. So the question is, what is inside candles? Or before that, let me show you what breakouts look like. A breakout of a resistance looks like this. You have a resistance, and the markets basically, after touching this a lot of time, it breaks out. So we generally, or on a bottom side, on a short side, when the markets after a couple of touches it breaks down, that's called a breakdown. That's called a breakout. What happens here is people who had gone short, who have a stop loss above these candles, or people who have gone long, who have a stop loss below these candles. Once the markets goes above them or the markets go below them, these guys start to cover. So two things happen. People who had gone short, when the market goes above them, they will hit their stop losses. So they will start to cover, they will start to exit. So because of them, number one, and number two, because you're moving above a resistance, a fresh buying comes in. Because of fresh buyers, and number two, because of people who cover. That is why a double whammy movement starts, and that double whammy move, solidifies or pushes the market to higher level. Same thing on the downside. Fresh entries on the shorts take place, and people who had gone long, their stop losses get triggered. So because of them, double whammy pressure on the downside starts to come in, and more lower prices are being pushed into the market. That is how breakouts work. So you always never mug up, but always think about this. Where is my buyer having stop loss? Where is my seller having stop loss? And because of them, when they will start to cover, and when do I start to take an entry? That's the point. Now, the question is that whenever the market, breaks out of a resistance, you will see more often than not, very rarely or very few times, or when there is such positive sentiments in the market, or really rosy macroeconomic perspectives, really rosy global domestic view, outlook going forward. In such cases, when the breakouts happen, some news comes out. In that case, market will keep on going up and up and up and up, and they don't give you one chance to enter. But you have to talk to yourself that, Devang, 80 to 90% of breakouts fail. So do you want to take that chance that the movement happens and doesn't even retrace back? Do you want to take that chance? कि यार मैंने move लिया, I go all out at that point of time, and I know that market will go up like anything. It's a breakout. But that is a breakout that happens only, I would say, see, 80% time breakouts fail. So 20% time they work. And these kind of breakouts, they happen only, I would say, 5% of that 20%. So you see what is the accuracy you're looking at. That's a very low accuracy. You might make huge money and going huge quantities on that breakouts, but does not make sense. So the question is, when the breakout happens, what do you look for? And I would say one of the best ways to trade an effective breakout, to trade a breakout that will work, is an inside candle. What is an inside candle? That's the question that I think people want to ask me. The inside candle looks like this. You have a good, so why inside candles are, I know I spend a lot of time, but just keep on listening to my views, because I think all of them are required for you to base your psychology on the concepts that I'm teaching you. Whenever the markets break out, the more often than not, think about it. People who have gone short at these points of time, and when the market comes at this point of time, and it's given a very sharp movement on the upside in a very small span of time, it will start to retrace. And this retracement is not a signal for you to go short. Gann has talked about this all his life, that whenever markets go above an accumulation, so for example, if the market is accumulating at a particular point of time, and if the market is breaking out, and agar yahan pe aapko koi bearish pattern mil jayega, it doesn't mean you will go short. Because it's a breakout on the charts. So now your strategy becomes buy on dip. So that is something which you have to, a fundamental thing which you have to plant it in your mind. Once you go above these accumulation zones, you are becoming buyer on dip. You are becoming a buyer, but you're not becoming a seller in the market. You don't go short in the market just because on a smaller chart some candlestick pattern is saying short. So having a view of the bigger chart, having a view by zooming out of the screen and seeing where you are, where the accumulations are taking place, and are you above or below them, will give you a lot of perspective. Now the question is that what I said is कि market जब भी एक upward movement देता है, let us say then you get a doji candle, some bearish engulfing, which shows that some kind of pressure is coming. But that is not a signal for you to go short. That is a signal for you to look for long opportunities which you have missed out on earlier. People who missed out these long, it is a signal for them that the market is coming to you. We don't chase the market. So when the market is coming to you, you find some opportunities on the long side rather than scalping for some shorts that may be working or maybe don't work at all and give you big loss. Hope you understand that. So you have to accept that whenever the markets go higher, people who have bought at these prices, they start to become skeptical at this point of time. And it's my very simple saying that people who have bought it over here, they cannot get the market over here. So for the market to get from this point to this point, people who have bought it over here, either they have to book some profit so that the market starts to come down a little bit, and new people start to enter the market. And the new people who start to enter the market, only they can get the market higher. So you need a conjunction. You need a lot of people together at different points of time. And for people to enter at different points of time, you need dips. So now in the future, whenever these accumulation zones break and when the market tries to come down on a shorter chart because of some bearish pattern, I don't want you to go short, but I want you to look for opportunities to go long if you miss those opportunities, just by keeping in mind that people who have bought at very lower levels, they start to become skeptical or they start to become content with the money that they're earning. And these guys, they will start to book profits over here. And the very good indication that this is not a reversal and just a pullback or a correction is that when this fall is coming in the market after a breakout, this will be followed by a very low volume. So when the market is going higher, it will give you very massive volumes. But when the market is coming lower, there will be hardly any volumes. Go to the volume indicator and check. There'll be hardly any volumes, because less volume after a breakout when the market is falling, it will mean that the people who have gone long earlier, only they are booking and no shorts are coming in. But if this fall in the market is accompanied by heavy volume, it is followed by heavy volume, that means it is not just a dip or a small pullback, but it is actually something very more serious. So that is something you'll have to keep in mind. And then after that, as I said, the market will go on further. So that is the background of what happens when the breakouts take place. And I can tell you, as I said, majority of the times the breakout takes place, we make some huge money over here and then we all go short over here. Why? कि यार अब तो expensive हो गया, we'll go short. But remember, expensive will always remain expensive. And the breakouts, generally a good breakout happens every 2 to 3 months in a chart, on a daily chart, on a little bit bigger chart, like a 4 hourly chart. And when those breakouts happen, they go on for some period of time. So try to zoom your charts out and find bigger movements. And those bigger movements, you have to trade on intraday charts to get the maximum potential of that, rather than trading every 15-minute, 5-minute, 1-minute breakout. That's the biggest problem in, I would say, the retail trading industry. So we're so much stuck to the making money in short term that we forget the bigger charts at all. I think bigger chart understanding is the biggest skill that you can have in today's evolving market conditions. Now, since you've got this entire idea of how the breakouts work, now you will be able to understand the inside candle concept very easily or very simply. What happens in an inside candle is this: you have a resistance and the market breaks out like this. As I said, we are looking for inside bars only in a breakout scenario, but we're not looking at inside bars in a range bound market. So just keep on remembering these points. Now, when the breakout happens, what did I just say? That markets can try to come down because people who bought at lower levels, they will try to book profit. So when the markets give a breakout, they start to come down a little bit. When the markets start to come down a little bit, we always feel, and I can tell you this for a fact, that we always feel that the markets are now reversing. And I can tell you for a reason that whenever these red or bearish candles start to become formed after a breakout bar, you guys take short. The biggest problem in us is when the breakout happens, we go long, maybe at this point of time, because we think the breakout has happened. And then after that candle, when the red bar is formed, then we go short, we exit a long at a stop loss, and we go short over here. The market comes down, we become happy, and again the market goes higher, we again get a stop loss. So then we say why trading doesn't work, because you didn't understand how the market was working. So I am now again and again saying what an inside candle is this. You will have a very big breakout bar. This is called a mother bar. A mother bar, one of the most important criteria of a mother bar is it is a full bodied bar. Matlab, it will not have too many shadows like this. It should be a good Marubozu bar. Marubozu means hopefully no wicks, no shadows. That should be the criteria in a mother bar. And this bar will be a high volume bar because it's a breakout bar. After this, as I said, chances of going up like is very low. You have to have some correction. So people who have missed, they enter. Uske baad the market within this range tries to consolidate or see some profit booking. And these are the candles. It looks like this. The profit booking looks like this, or it can even look like this, some small red colored bars. It can look like this also. It can look like this also, the shadows going above that mother bar. That is also fine. But the idea is all these different types of candles, they will be very low volume candles. High volume will mean it's a reversal. But low volume candles in this scenario, that would mean that it's only profit booking by the people who had entered at lower levels. So my understanding, I gave a trade on the Friday markets also when I said Bank Nifty is becoming strong, Nifty is becoming strong. Go back and check those charts. I'll show it to you in the live market also today. But whenever the markets start to give a dip after a breakout, and whenever the markets are staying within the range of the mother bar, these all candles are called inside candles or inside bars. What you have to wait as an individual is when does the market again cross the high of the mother bar. If you're a cautious person, you can wait for the high of the inside bar also if the wick is higher. There will be a lot of times when the wick is higher. So if you are a cautious person who doesn't want to take risk, you want to be very, very sure, you can wait for the market to break these highs and then trade. But if you are a risky investor, then you can make sure. So after these inside bars, as soon as the market breaks the highs either of the wick for a cautious investor and the high of the mother bar for a risky investor, you can go long, and your stop loss in the market will be any touch of this point of time. The low of the breakout bar, that will become the stop loss. It's not a closing stop loss. The market has to close 15-minute or below this. It's not like that. Secondly, the entry is not a closing entry. The candle has to close above that. No, you will enter the minute or the millisecond you will hit this high. So your entry will be triggered. Remember that. A lot of people ask me again, time frame kya karna hai? Don't ask me these stupid questions again. Time frame can be anything, but I would always suggest minimum should be 15 minutes to get meaningful entries. 15 minutes should be good, but again, weekly, daily, monthly, hourly, everything will work. It totally depends upon the kind of a trader that you are. As I've already said, imagine if you trade a 15-minute inside candle on the upside, you will make money which is of 15 minutes. But if you trade a one-day inside candle breakout on a 15-minute chart, you will make magnanimous money. So don't forget that. It's always better to have a top-down approach. Always better. So just to clarify it out, there is no restriction on time frames. Your SLs are always the very second you touch these lows, that's the SL, the strict stop loss. And that is why we're giving the stop loss. The minimum entries, the entry is the moment you go above this or the very second you go above this. So when I see this inside candle formation on my chart, I will look at my phone. If this price is 21 rupees, as soon as 21 comes on the phone, I will not look at the chart now. I know what the price is. As soon as 21 comes, I'll place a buy order. I can also do one more thing. If I want to put, let's say, 1 lakh rupees into this inside candle breakout, I will place 75,000 here and 25,000 when this breaks to basically break up my entry. But the stop loss will come below this and you have to accept it. Minimum targets 1:1 will come. If you know that this is the risk that you are bearing, go for 1:1 target, keep on trailing. If you ask me for the accuracy, it's a 90% plus accuracy on this setup. It's the most genuine. It is one system. that I want you all to follow every single day. You might not make money tomorrow when you wake up and trade this, but always remember, trading is about sample size. That you have to understand how effective the inside bar is. You have to have a big sample size. Take 100 trades. You will see 90 will work, 10 will not work. So what happens between most of us is when we trade tomorrow's setup, maybe it is that day out of those 10 days in which it will not work. But again, remember, it's a breakout pattern. So try to take it as a breakout pattern. Okay? The more on the risk reward you go, if you go for a 2:1, the accuracy will start to come down. But again, that is the reason we have trailing stop losses. So we will keep on trailing with the moment we go higher. But 1:1 is minimum. And in my experience, 1:1 is always, or 90% of the times, given in that very first candle itself. So it's very important that the moment you break these highs, the moment you break these opening, the open price, whatever it is, the highs of this mother bar, you have to take a trade there. So that is a little bit of a theoretical part of what an inside bar is. Same thing on the short side. If you have a support over here, the first candle will give you a breakdown. I am not entering over here because maybe this breakout fails. Maybe your ATR value says that yahan tak there is a professional buffer. It could be all these things. Whenever the market breaks down, it will start to halt like this. It will start to give some inside bars like this. What you have to look for is this Maru Bozu, this full-bodied red color short bar. As soon as these lows start to break, the moment it breaks, yahan pe you can go short. The SL will be the highs of that candle, and 1:1, and you keep on trailing and trailing and trailing, money will keep on making. So yahan pe aapka ATR buffer will also get triggered, plus your inside bar entry will also come in with the SL over here. And as long as this SL is intact, you can stay in the trade that you want. You can always stay in the trade. There's no problem. That is the understanding when to go long and when to go short. I hope it's clear. One thing before I go on to the practical examples of all these inside bar setups on all different time frames, one thing that I would like to add is that I did a live webinar with all of you guys on the Gann's 3 down days rule, what Bowden also interprets it. So एक उसको याद रखना in this setup. I'll explain what. People who are new, मैं समझा देता हूँ, don't worry. The rule of 3 down days, I want you all to use it in inside bar. How? Let us say a market may the breakout has taken place like this. Obviously, because it is a breakout, you should expect the matters of the market to be hot. It's quite simple. Example deta hu. Let us say some news comes in. Let us say there is some news in the market, and the news like Reliance is acquiring Airtel. Example de raha hu. Now, if that news is hot, Reliance share price has to react fast. It's not going to be like news comes in today and the Reliance share price is consolidating for 5 days and then breaks out on 6th day. That will not happen. If something is hot about a particular stock, about a particular chart, about a particular time frame, if something is hot, something is noteworthy for you to catch, the movement should happen fast. So what I'm saying is, whenever these breakouts happen, sooner or later, even if they are consolidating after a breakout. So one thing is it moves up immediately. What I said in the starting, if the news is very, very hot. But as I said, in the most of the cases after a breakout, markets always try to halt. They always see some profit booking where you have been going short till now, but now you know it is not a signal to go short. It's an inside bar. It's showing strength. It's showing profit booking by earlier players and chance for you to enter. So I am not entering here. I'm waiting for confirmation above these candles. Then only I can enter. So the question is, when a breakout is happening, the matter has to be hot. If the breakout is nice, if the breakout is a good breakout that should sustain, the movements have to be fast and furious. What I mean by that is, use the rule of 3 here. Matlab that whenever the inside candle breakout happens, you cannot have more than 3 candles inside the inside bar, the mother bar. What I am saying is, if for some point of time, generally kya hota hai, whenever you get a breakout bar, you get one inside candle and then the market breaks out. This will be a case when the news is very hot or news is very, very noteworthy. Sometime what happens is market gives you one candle, gives you 2 halts, and then it breaks out and you enter over here, SL over here. Ye bhi chalta, there's no problem. Third scenario can be the candle breaks out like this. You have 3 candles halting and then the market breaks out. This is also fine. I am okay. When I say 3 candle, meaning 15 minutes, if you're on a 15-minute chart, this is 45 minutes. If you're on a 1 hour chart, it's 3 hours ho gaya. If you're on a 1 day chart, it's 3 days. If you're on a 1 week chart, it's 3 weeks. So I am okay if inside bar, if this mother bar is hosting 3 parties inside. I'm okay with that because some news require some kind of halt in this market. But what I am saying is I do not want more than 3 candles. That is what Gan also said. If for example, so agar ek 3 candle ka halt aa jaye, it will mean more likely than not ki 4th candle will break out. I hope you get this psychology now. Because if 3 candles are halting, it is more likely, much more likely that the 4th candle will break out. तो वो आप ऑब्जर्व करना वेरी केयरफुली. बट व्हाट इफ द मार्केट इज ब्रेकिंग आउट एंड इसके अंदर 4 कैंडल्स आर हॉल्टिंग? तो दिस विल गिव यू एन अंडरस्टैंडिंग दैट आई एम नॉट सो इंटरेस्टेड टू ट्रेड. लेट अस से इफ फॉर सम रीजन यू हैव टेकन दिस ट्रेड ओवर हियर, आपने यहाँ पे इमीडिएटली ब्रेकआउट में ट्रेड ले लिया था. इफ यू हैव टेकन दैट ट्रेड and if 4 candles are halting, then my suggestion to you will be that there is some loss of momentum. Market maybe is not so interested to do that. So whenever it is hope that we cling on to, whenever there is doubt that we cling on to, whenever we have a doubt in the system, we will try to, if you've entered over here, we will take a small stop loss, small trigger hua hi nahi hai, small loss, small profit or cost to cost. Because most of it is possible that after this the market will break out. But what did I say? It is not my job to trade that one off. I want to develop a system, a disciplined system, and I want to take entries only when that system is satisfied. So if the market is halting for 4 candles, 5 candle, it is showing loss of momentum. It is still possible that the market can break out. But I am saying if you have taken an entry already, then you will make sure कि आप यहाँ पे small loss, cost to cost, small profit, whatever it is as per circumstance, you get out because you signal loss of momentum, and you will again re-enter when the market again satisfies the inside candle. So this rule of 3 is more prevalent to those people who already take an entry and then inside candles start to come in. So this can help you to know when should you take that loss or whether you should or you should not. अगर 3 candle के बाद move आ गया, you are perfectly fine. But if it is halting for 4 candle or so, then maybe it is a time for you to start to take an exit. So this is the entire understanding of what inside bars are. In the next part of the video, I will show you examples. Enjoy. Thank you.